Well, hello. My name is Fielding-Pritchard, and welcome to our presentation here. I'm the senior partner here at ME Fielding. There are four of us here in partnership, and we have, I don't know, something like 50 years, maybe that's an exaggeration, 40 years of experience in implementing new accounting systems, in particular IPSAS and IFRS. We also have significant experience between us working on conversions, so converting things like Russian accounting. So what's the purpose of all of this? Well, we've worked for many years working in implementations with governments, and when you go out there into the internet, what you'll actually find is that there's 101 sites that will talk to you about IPSAS and 1,001 sites that will talk to you about IFRS. But every single one of those systems simply talks about, or those sites, talks about the standards, and this is what you do with PPE, and this is what you do with leases, and so on and so forth. And it's all based around what the debits and credits are in the standard. What none of these presentations do is they actually run you through the actual implementation process itself. Now, it's maybe a little bit cheeky to say this, but every university in Western Europe and every university in America will give you 10 guys who are absolute experts on what to do with the standard on PP&E and what to do with the standard on leases. But in terms of an implementation, it's a move or a change from point A to point B. Now, what we have there is simply point B. What you don't have in that equation is you don't have point A. So there isn't some kind of specialist out there training you on what is the existing system. And bearing in mind that a move to IPSAS involves you changing completely the purchasing system, and making your changes to even things like the justiciary, the legal system, the budgeting system, and so on. Now, none of these things are covered unless you go to an in-depth implementation site such as our own. Secondly, it doesn't cover the real meat of the thing, which is saying, okay, this is what exists now. How do we get from there to this point B? And that is all of the work that goes into your Oracle system, or in some governments have a SAP system. Some governments even still have a paper system as well. So we can talk to you about how to use that. The purpose of what we're doing, therefore, is to go that little bit further. It's not to look at accounting standards, and I apologize now to any students of ACCA or any students of ICAW or ICAS. This is not going to be much use for your exams. This is aimed at people who are actually doing practical implementations and saying, okay, go away and read IES Plus. That'll give you amazing, brilliant site. That'll give you amazing information on what to do with the standard in terms of debits and credits. But now what you need to do in terms of the analysis of where you are in the current position and how you get from there to that standard, that's what we're really looking at here. If you are looking at this, you know all the stuff with all of these websites. Please can you friend us on Facebook, can you subscribe on YouTube? You can contact me, my email address is there, and in addition to that you can get us to the website, through the comments section, etc, etc. Thank you very much for tuning in, we really do appreciate it. Please tell us what we do well, and I guess now in the modern world, please tell us what we do not so well as well. Okay, there you go. Just one other thing, there is a book with this. The book is on the website. Please can you make sure that you download the book, because the book contains a lot of background information that's not actually given in the lectures themselves. Okay, thank you. Moving on to slide 2 then, I just wanted to cover very briefly the history of IPSAS. This is important because you have to understand what it is that you're actually doing with an implementation process. Rather surprisingly for someone who's made their living for the last 10 years out of IPSAS implementation, or all over the world on several continents, it sounds a little bit strange to come from me, I guess, but I would say to you that I'm not really that big a fan of calling these things IPSAS implementations. What we're really trying to do is we are trying to improve the existing accounting system so that it gives the best quality of information so that governments can make the best decisions. So again, I like to be someone who quickly cuts to the meat and doesn't give lots of background information, but I think that the history of IPSAS is worth spending 1 minute on. So let's just have a little look at where the whole thing started from. As you can see, therefore, in the slide, we're back in Great Britain rather in the 1980s. As you can maybe tell from my accent, which is now about to get stronger, I'm from Scotland, and at that time we had a Prime Minister called Margaret Thatcher. Margaret Thatcher came to power at the end of the 1970s. She was a strong monetarist. She said that British industry, so if we just look at industry, was flabby, inefficient, couldn't compete. She withdrew subsidies, and her basic argument was that if companies cannot compete, be they British, then they should be allowed to go bankrupt and should be replaced by companies which can. So that was the system in the private sector that she introduced. Many of us will remember those times. We saw unemployment go from 1 million to 3 million, even after she changed the way in which they calculated it. But her basic ethos was that we need to go through these tough times to get a lean, mean private sector. She then took the principles which she had in the private sector and she just did 100% the same and applied them to the public sector. She decided that the public sector had a lot of people who basically weren't pulling their weight, that it needed to be improved in terms of efficiency, etc., etc. And you can see where she's coming from. So one of the things that she did, therefore, was that she changed the whole basis of accounting. So Margaret Thatcher took the public sector, the government sector, and she introduced a whole program which was an efficiency program. One of the strands, one of the parts of that efficiency program was introducing a new accounting system. And basically what she did was she took the accounting for private companies and she said that's how we're going to apply it to the public sector. So therefore they will have income and they will have expenses and they will be judged on exactly the same accounting basis that private companies are. And that's what happened in Britain. That system has now been extended throughout Great Britain, and the system now in Britain is that Britain actually uses IFRS. So Britain as a country, for its government accounts, actually uses IFRS. Now that will have to change in the next few years when IPSAS, which is the European Union government accounting standards, come in, but it's not going to be a big change because they're going to be based on this system as well. So Margaret Thatcher, the 1980s, it was her move to improve efficiency in the public sector. She ended up firing about 30% of the people, and the British government sector adopted commercial accounting standards. So they adopted, in fact, they now use what are IFRS. Following on, if you will remember back to those times, if you're old like I am, you will remember then that we had Ronald Reagan, who began to bring in some changes in the United States of America, and this idea of efficiency in the public sector was then copied throughout Europe. Like so many of these things, it started off in the northern states in Europe, so Germany began to bring these things in, the Scandinavian states, the Danes, and so on. And then it gradually drifted south. As we saw this movement towards a demand from government for efficiency, and therefore by bringing this idea of better quality of services, better financial efficiency to the public sector, this then began to spread out throughout the world. And we saw therefore that the first IPSAS was issued in the year 2000, and we got this idea therefore that IPSAS was born from this. So IPSAS was born from this idea of using commercial accounting standards, applying those to the public sector, and by that giving us better information and using that information then to judge and therefore improve efficiency in the public sector. So Margaret Thatcher, the 1980s, we have this move to commercial accounting so that we can make judgments on the performance of ministries, departments, individuals, and so on. And so she brings in this idea of commercial accounting. Now, back in the early 1980s, when this was happening, every country in the world, to the best of my knowledge, was on a cash basis system. So with a cash basis system, you have your income, which is cash received, and you have your expenses, which is cash paid. Commercial organisations who were using US GAAP, UK GAAP, and so on, were obviously on an accruals basis. So therefore it meant that governments had to move from a cash basis to an accruals basis. Right, so that you can explain that to staff of governments, because they will understand the cash basis, you need a little example. So here we go on slide number 3. I've given you a little example that shows what is the difference between cash and accruals. So you can obviously read the slide as well as I can, but what the hell, here we go. So Sally moves to New York from London and she goes to work by metro. Right, you'll have to forgive me here. I spent many years living in Moscow, and we used to call the underground the metro. So the metro here means the underground, the subway, the train that goes under the ground, basically. On the 1st of December, she buys a 1-year ticket. So this is going to be a season ticket, and in Russian, abonentский билет. So a ticket that lasts for 1 year. She buys it on the 1st of January, assuming that they're at work. And she pays in cash $1,200. So she's paying for her year's travel in advance. Right, the question therefore for Sally, and here we've got her explaining it to her mother, is when Sally's explaining that, does she say, okay, to travel on the metro, on the underground, costs me $1,200 on the 1st of January, and then it's free for the rest of the year, or does it cost me $100 a month? So how would you describe that transaction that Sally's just gone through? Well, if your answer is number 1, then your mind is working on the cash basis. Now I really hope, and there will be some people who think number 1 is correct, you always get a small percentage. I hope you're looking at number 2 as the correct answer. But number 1 is what's shown in the cash basis. $1,200 on the 1st of January, and then free for the rest of the year. If your answer is $100 a month, then your mind is naturally working on the accruals basis. And that is the difference between the two, because with the accruals basis, you are showing the expense not when you paid it, but when that expense actually arose. And that's your difference between cash and accruals. We show in our income statement the expense we've actually incurred during a period of time, not the expense we have actually paid. Now the difference between what you've paid and what you've incurred will be either an extra payable or a prepayment, some form of a receivable. And that's the advantage of these things, is that accrual accounting will give you your payables and your receivables. Right, that's the difference. Have a little look at that example which is given to you there, but that's a nice little example of what the difference is between the two things. So we've had a little look already at the background to why it is that this thing was invented, why it was, where it came from, and it came from this time of Margaret Thatcher, improved efficiency and so on. And then we showed you the differences between cash and accrual accounting. So we put these little discussion topics in. The reason is quite simply that these training courses are designed for clients, so we actually deliver these to clients. And discussion topics are very useful. You'll see this one comes very quickly, because it gives us an opportunity to talk to those people at the client, and the more we can get them talking, then the more we can see where the issues will be with implementation. So here, and for those of you who are ACCA students and who have stuck with us this far, a little bit of exam technique, you'll see that there are 2 questions here, so you can break this down into 2 questions. As the slide says, please download the book that goes with this. There is an explanatory book that goes with this, and that book has backup information for all of these slides, so that's all free for you as well. So what are the possible effects of an efficiency program? Well, I hope coming into that, therefore, the possible effects of an efficiency program are that it'll be more efficient. So if the system is more efficient, what's actually going to happen then when we introduce this new accounting system? The basic point of it is that it's going to give you improved qualities of information. So the actual amount of expense that you've incurred and the actual amount of revenue that you've earned or that you're going to receive is going to be shown to you in your income statement. In your balance sheet, you're going to have information on assets. And you can do this by going through the balance sheet. You're going to have information on your assets. You're going to have information on your inventory. You're going to have information on your receivables and payables and so on. So therefore, with your efficiency, again, I mean, in terms of exam technique, and also in terms of giving it to a client, better decision making will be number 1 through better quality of information. And then therefore, if you go through the items which are in your balance sheet, so if you look at your assets, improved asset management. So you can use the information for better replacement cycle analysis. So how many years do you replace government cars? You have other things, oil rigs or whatever. So what's the best use that we can make of our assets? How can they be transferred around ministries and so on to ensure that we get the best use of them? So if you're looking at, kind of 5 things here, I think we've listed 5 things in the explanatory notes. Better information, so better asset management, replacement cycle analysis when we need to buy new assets and so. Better information that you'll have about your inventory, so what's the value of your inventory. When we come on and look at inventory, you'll see inventory valuations tend to be slightly different in governments from they are in commercial enterprises, but better inventory management, so we can manage better the number of shirts that we have for the police in the country. You can have centralized inventory systems and so on. So better inventory decisions, manufacture of new shirts and so on. For your receivables, therefore, and bearing in mind that the decisions vary with receivables. So when we talk about improved receivables management, if you're Tesco's or if you're Price Waterhouse or you're someone like that, then what's going to happen is your basic object is to collect your receivables as fast as possible. That may not be the case if you're the government. You almost certainly don't want to actually give money to people. You'll certainly want to monitor the levels of receivables, but you may, for example, want to slow the collection of receivables. Let's give people an extra month to pay their tax and so on. It's unlikely, if people are honestly trying to run a business and they're having a little bit of a hard time, that the government actually wants to make them insolvent. So you may want to give them a longer time. So it gives you a better chance from the information to set debt collection levels at the level that you want. Similarly with your payables, if you're PricewaterhouseCoopers or if you're Tesco's, your object of your exercise is to pay your creditors as slow as possible. With the government, again, you may want to pay certain creditors slowly and certain other creditors faster. The point is that with the information is that you can look at what your payables are. It's likely in a historic accounting system that you did actually keep records of the assets, that you did actually keep records of the receivables, that you did actually keep records of the payables and so on. Certainly most countries will have subsidiary departments. So the Ministry of Property in Russia or Kazakhstan will not only keep details of the assets, but they'll also actually have depreciation policies. So you're producing an accrual part of a set of accounts as a sideline. Similarly with your receivables, they will know what their receivables are and they will be looking to collect those receivables. The amount of analysis that they put into them and the transparency of the information is where the difference comes, and your ability to classify them as well. Because while we're talking about IPSAS implementation, we have this figure of these wonderful accounting standards. Your IPSAS implementation will be a catch-all that will allow you to actually improve the quality of your accounting information. So your receivables collection department can use IPSAS implementation to get an improvement in their Oracle or their SAP system that they have. So therefore your first question here was, what are the possible effects of an efficiency program? Better information, better use of money as well. So we can say happier citizens. We can say, well, if you're freeing up resources, so you have people on the payroll and you don't need them in a certain department, you could put them into other departments, a more effective deployment of people. And then we talked about asset management. If you are going to be writing about this in an exam, or if you are going to be preparing a brief paper, a short paper for the Minister of Finance in the country you're working in, just go through the balance sheet. Better asset liability management. Why does central government resist? There tend to be 3 basic reasons. The first reason is that they genuinely believe that their decision making does not need to improve. We've seen that in a couple of governments. Certainly persuading people in countries such as the United States of America or Russia that you as a foreigner can come in and can improve their decision making is a hard sell. So it may be that they don't believe that this is the right way to improve their decision making, and that they don't see that IPSAS will improve that. That's probably more due to your poor persuasion techniques than them, but it can be a hard sell. More likely, particularly in those two countries, the second reason. So the first one is that they don't get that it's going to improve their decision making. The second one is the scale of the operation, from a physical, financial sense and from a political sense. The scale of the operation is enormous. If you looked at implementing IPSAS in America or implementing IPSAS in Russia, you'd probably be looking at hundreds of millions of dollars to do it even half decently. The fact that somebody sitting in the Ministry of Finance believes that they can mobilize that kind of resources, including the number of people, it may just be unrealistic. It needs to be a whole of government decision. So therefore, and it's the same in America and in many other kind of Western countries, the cost, the human cost, the dollar cost of just implementing this thing is just too simply large for it to seem reasonable. So therefore, the IPSAS board have to come into countries like that and try to talk to the Prime Minister and get him to get it to be a whole of government project. If we looked at it financially, if you look at it politically as well, while the government, in terms of the Minister of Finance, may be completely convinced that it's a wonderful idea, he may understand that the Ministry of Health and that the Ministry of Defence may not completely agree with him. My experience is actually that the strongest supporters of this are Minister of Finance and Ministry of Defence. Ministry of Defence seems to like this very much. Other ministries, when you're going out to agriculture and stuff like that, explaining to them that they need to upgrade their computer system starts to become, in my experience, a harder sell. So we've got this idea that the persuasion factor is not there to begin with. Secondly, we've got this idea that the persuasion factor is there, but it's such a big project for the government in terms of overall budget, there may be doubts that it may work. Someone doesn't get to be Minister of Finance without being politically very, very sharp, and they may think there may be financial issues there. The third issue may be disclosure issues. We've certainly seen in certain Soviet countries at certain times there will be areas of the country where more or less the only employees who are working and who are getting paid money are government employees. If you have an efficiency drive, so you have 30 people working in a library and it's obvious to everyone you only actually need 10, okay, we can fire those 20 people. But for the government, there becomes a decision then, okay, one, they're going to be unhappy, so there's the concept that there may be some form of unrest. But the second thing is, what do you actually do with them? You're going to give them unemployment, but some form of unemployment benefit. In fact, the easiest way of administering payments to them is just to keep them employed, rather than beefing up and setting up the unemployment benefit system in the region. So we may get, through certain periods of time, the fact that yes, there is inefficiency in this particular region, in this particular ministry, whatever, but that is not only known, it is tolerated and encouraged in the short term, and the government will have a program which will deal with this in the longer term. Where we had, particularly we saw this a lot in the Soviet Union, when we had the move from the old Soviet economy to the new Western economy, areas of the country lagged major cities, and so therefore it was almost economic to keep those people employed doing very little for periods of time until we can play catch up with the economy. Okay, so the government may resist because the persuasion isn't strong enough, because persuasion is strong enough, but we don't know whether that will exist everywhere. And thirdly, because of this idea that while it's inefficient, the inefficiencies are economically better than the alternative. Okay, right, those are your discussion topics. Please note, those are just some stuff that I came up with from my discussions with governments over the years. If you're thinking of something else and it's not on my list, then you're probably right, and it probably belongs there. If you look in the book, there's a little bit of a longer discussion there as well. Okay, so the question therefore is, having done all of this, well, why have these things become so popular? How come so many governments around the world have? I think it's obvious that we all want to see a more efficient government system. That to have, to have the government system be efficient is a positive thing. Other reasons why this is happening as well is that, and we've got some on the slides here. So the first little group are kind of three things together here. Historically, governments have written their own accounting standards, and then they've written their own exceptions to them, their own disclosure notes, and then they've changed them, they've followed them, they've audited them, and so on and so forth. And if I can add in here as well, that this has actually become more of an issue for international organizations such as the UN. The UN itself historically produced what were called UNSAs, and UNSAs were the UN accounting standards, and they produced them and they monitored them and they changed them and they followed them and then they audited according to them. And it's very, very nice work if you can get it, isn't it? You write your own rules and then you pat yourself on the back and give yourself a clean audit report because you followed them yourself. And if you don't like them, then you change them. And that was the problem for the UN, was that governments themselves were saying, look, you need to have some kind of accounting system which gives us some form of transparency, where you don't just get to, I don't want to say make up the numbers as you go along, but where there's an element of outside control. And so the UN is still in the process of moving en masse. The UN and its agencies is moving towards IPSAS. That same principle applies to governments. So therefore the government can now say, okay, we have national standards. Now please can you notice that I don't think there's any country in the world that's actually adopted IPSAS. Governments adopt national standards, so they adopt their own accounting standards. Then they can make small changes if they want to. And they can do the updates when it suits them as well. So governments will adopt national standards which are compliant to some degree of 100% with IPSAS. But then when IPSAS themselves get updated, then they'll make the changes to those standards. So the government therefore can show that there is this independent body which is setting, updating and administering the standards. Those standards are set by people who are internationally known. I know several people who work at IFAC, and they're very, very nice people and very, very well qualified, excellent bunch of professionals. And so therefore these guys as well are setting what is now considered to be for governments international best practice. So the question almost arises, if you take a country like the United States of America, why are you not applying best practice? And pressure comes on them. Yeah? So we have this idea of independently set, independently administered, international best practice, which is why so many countries want the things now, and therefore the government does just not control the whole process the way that it did before. What is the benefits of those? Well, we'll come on to those in a minute, but basically it's this standing that now your accounts are internationally set and they actually mean something which we all understand. So that's your first group, is this idea of outsourcing to an independent group the setting of the standards. The second thing is what they allow us to do is they allow us to track financial performance, interest and capital repayment issues. So we're particularly looking at users of accounts here. Now, remembering that a government is to the same degree like a company, it goes out into the market and it borrows money. So now what's happening is that the lenders of funds, so the people who are buying bonds or treasury bills, gilts and so on, can actually see what the financial performance of a country is. Now obviously the country isn't designed to make a profit the way that Tesco's, PricewaterhouseCoopers is, but they want to see that there's a reasonable sum of money coming in, and that's reasonably matched with the expenses. You want to see therefore that they can meet interest payments, they can meet capital repayments, and what their likely financing issues are going to be in the future. So our first set was this idea of independence. The second set now is for users of accounts. So tracking financial performance allows users of accounts to make judgments on the management of the economy. They are transparent, so therefore what will happen is, because of the disclosure requirements which are in IPSAS, or your national standards which are IPSAS compliant, they will have to disclose certain amounts of information. Certain points of information will be given to us. If they're not there, then it automatically raises a flag. We have this idea of comparability as well. We have a certain sum of money to invest. We can buy some bonds from Argentina, we can buy some bonds from Brazil, we can buy some bonds from Kazakhstan, and we can compare them. Because their accounting systems are more or less the same, therefore, assuming that they've all adopted IPSAS, I think Argentina's in the process. Assuming that they've all adopted IPSAS, therefore, we can compare them, and we can see that Kazakhstan has this sum of money coming in which comes from the sale of metals or something, but it's not as good at collecting its taxes as Argentina is, and so on and so forth. So we get this idea of comparability. I put the last line on the slide doesn't sound fantastically professional, but it very well sums up what we're talking about here. If you are a user of accounts, when you look at the accounts, therefore, because these things are IPSAS compliant, you know what's actually sitting in front of you. You know what should be shown, you know what you're looking for, and you understand the information which is given to you. So it is this whole idea, therefore, that we understand what we've got, and from that we can get the information that we need. So the slide really, therefore, says that there are two things. The first thing is this idea, it takes away from government this idea that the government writes its own accounting rules, follows them and audits them, and can change them when it wants. We now have some independent outside standard of intellectuals who are setting these things. Secondly, this idea that users of accounts now know what they've got. So sitting in them there is international standards, blah, 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 but we can compare across countries, and there is transparency of information as well, rather than the historic pieces of information we've been given. Our final slide follows on from the topic and really just covers things which you should already have picked up on before. If we just take the first one, then cash accounting gives us no idea of our assets and liabilities. And you've kind of seen that already. You know, if you build an airport and you spend 10 million bucks on it this year, then in your expenses you have 10 million bucks. And that's it. It gives us no idea that this thing is going to be around in the country for another 100 years, that it's going to need repairs, that maybe at some stage it's going to be upgraded, that it's conceivable to sell this thing to a private operator, blah, 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 blah. All cash accounting shows us that you spent 10 million bucks on an airport. Now, again, we've kind of covered this already, but to be fair to those countries that have cash accounting systems, most of them then have subsidiary ledgers in which they import a kind of part of the accrual system, and we have this idea that they will keep records. So they do keep records. But we can apply this even more, and in fact what IPSAS really brings out, the one area where the government's going to get all of its really nasty surprises adopting IPSAS is in its liabilities, and it's usually in its employee benefits liabilities, when you suddenly discover how underfunded your pension fund is, and so on and so forth. So therefore, cash accounting will never tell you those things. What is your pension liability based on, because the liability arises in the future, it's not a cash payment now. So therefore, cash accounting gives us no ideas of these things. Accrual accounting, because we're talking, you don't even have to say IPSAS, IFRS will do the same for you here, gives you this idea that we are including all of our assets and all of our liabilities. We are disclosing those. So if you look at the third point, we are disclosing those specific assets and liabilities. So think of the disclosure requirements on related parties, for example. A lot of governments don't like that one. Assets, usually the difficulty is valuation rather than disclosure requirements. But you bring in things like finance leases. We now got standard number 32, so you've got concessions coming onto the balance sheet as assets and liabilities, and your pension costs and so on, which are coming onto the balance sheet. None of these things were there under cash accounting. So we include all of those things. And people need to know this stuff. If you're lending people money, you want your money back in the future, and there's an enormous pension fund liability, it's going to worry you a little bit. The second thing is, so that's points 1 and 3 on the slide, the cash accounting and the disclosure requirements. The other thing is we can come up with standards which we can apply. We've talked already about this idea of efficiency. Margaret Thatcher took this a very long way down the route, and most countries have followed her now. So in other words, there will be specific targets set for a ministry, then a department within the ministry, then some sub-department, and then for individuals as well. And this is this use of these things called KPIs. KPIs is key performance indicators. So how efficient are we? How many aeroplanes fly on time? How many buses fly on time? How many of these things break down? The stopping of these things, buses breaking down, or the achievement of certain targets, even down to the point where certain numbers of invoices are dealt with a day, certain number of calls at call centres. And in Britain now, people's salaries depend on these things. You get a bonus based on performance. Have you met your key targets? In the good old days, it used to be in the health service, for example, they would have service cost measures as well. Service cost measures are cost measures that depend usually on more than one variable. So the big one that used to be in the in the health industry, in our hospitals, was the cost of one person in one bed for one night. What is the average cost? And the aim was to get that down low. The problem with these things is that people become statistic obsessed, and so you have to try and beat the statistics. And sometimes you'll find that that will skew performance. As people beat their statistics, overall performance goes down. Anyway, back to IPSAS, back to our accrual accounting, remembering that what we're really trying to do is implement an accounting system which gives us the best information to make the best decisions on and allows us to monitor our performance. So let's forget about IPSAS. That's what we're really trying to do. And IPSAS at least goes a long way down that route. By having commercial style accounts, it brings in this idea of assets and liabilities, brings in these KPIs. Thank you very much for listening to all of that. My name is Mark. This is going to be implementation presentation number 1 of, well, I think probably something like 10. If you liked us, I said this already, but it's so important nowadays as you're marketing. Please can you like us on Facebook and YouTube and so on. Please send us your comments. mefielding.com. If you go to the website, there's a comment section on there. And if we can do anything to help with your implementation, please contact us. I hope to see you on presentation number 2. Thank you very much.